Let's talk about technical indicators in Forex trading. Technical indicators are tools that can be applied to charts to give some insight as to what is about to happen in the market next. However, in this video, we are going to be focusing on the Relative Strength Index indicator. Relative Strength Movement, also known as RSI, is a technical indicator used in Forex trading to measure the strength and speed of a currency pair's price movements. Think of it as a guide that helps you figure out whether a currency is being overbought or oversold. When you add the Relative Strength Index indicator to a chart, you will notice that it displays rising and falling lines below the chart. If you are using the TradingView chart, you can click here to enlarge the RSI chart for a clearer view. When you hover around the RSI line as you move up and down, it shows you a reading between 0 to 100 to show how overbought or oversold. If the RSI value is above 70, the currency is considered overbought, meaning traders might have pushed its price too high or too fast. This could indicate that the price might soon fall. If the RSI value is below 30, the currency is considered oversold, meaning its price might have dropped too low or too quickly. This could indicate that the price might soon rise. RSI helps confirm whether the market is in an uptrend, that is when RSI stays above 50, or a downtrend, that is when RSI stays below 50. We are looking at the Euro USD chart from TradingView. Notice how when the price is in an upward movement, the RSI also goes up. The same thing happens when the price movement goes down. The Relative Strength Index measures the increase in a currency's price relative to its decrease, usually over a period, usually 14 days. RSI compares recent gains, which is when the price goes up, to recent losses. That is when the price goes down over a specific period of time. When you double click on the RSI line, you notice that you can input data. The default length of an RSI is usually 14. You can change the RSI length to whatever number of days or minutes best suits your trading strategy. For this example, let's go with 8th period. So you see that on the 5th of December 2024, the RSI went as high as 86. And we can see that there was a peak on the chart at that period. An RSI above 70 tells us that the currency pair is overbought. Now, how do I trade this? When a currency pair is overbought, it gives you insight into the possibility of a reversal. So if I had an open buy position, it may be a signal to sell. And if I was looking to enter the market, it may be a signal to enter the sell position. We see that the following candlesticks are red and more people sold. On the flip side, when the RSI is below 30, that is a signal that the pair is oversold. This may be a signal to sell if you have an open long position. Or if you are looking to open a trade, it may be a signal to go long. Now, how do you decide what length of RSI to use? The length or period of your RSI is a critical parameter in trading analysis. This is because it determines the number of price bars or period used to calculate RSI value. Choosing the appropriate RSI length depends on several factors, including your trading style and the assets being traded, and also the time frame that you are analyzing. Here's what should determine your RSI length. First, trading style and strategy. Short-term traders or scalpers prefer shorter RSI length, which is about 7 or 9 periods. These settings make the RSI more sensitive to price changes, providing quicker signals for entry and exit. Swing traders often use medium length like 14 periods, that is the default setting. This provides a balance between sensitivity and reliability. Long-term traders or position traders use longer RSI length, which is 21 or 28 periods. This setting smooths out short-term noise and provides signals aligned with broader trends. Another factor to consider when choosing RSI length is market volatility. During highly volatile markets, a shorter RSI length can help capture quick price movement and overbought or oversold condition in fast-moving markets like cryptocurrencies. During less volatile markets, a longer RSI length may be more appropriate to avoid frequent false signals in slower moving markets like bonds or blue chip stock. You also want to consider the asset characteristics. For assets that tends to trend consistently, a shorter RSI, e.g. 21, can filter out noise and focus on the trend strength. While for range-bound assets, Shorter RSI lengths are useful for capturing more frequent reversals in assets trading within a defined range. Also, you should consider the time frame being analyzed. For short time frame, which is about 1 minute to 5 minutes, shorter RSI lengths, e.g. 7 periods, are better suited for quicker signals. For quicker time frame like hourly or 4 hours, a standard 14 period RSI often works well. Longer lengths, e.g. 21 or 28 periods, provide smoother and more reliable signals over extended periods. Lastly, risk tolerance. A shorter RSI length can generate more frequent signals but may lead to more false positives. A longer RSI length reduces noise but may delay signals, potentially missing early opportunities. The default use RSI length is 14 periods, as recommended by J. Willis Wider, the creator of RSI. However, traders should adjust the value based on their trading strategy, time frame, and market conditions. Always test your settings on historical data to ensure that they align with your trading goals. Always remember that RSI is a helpful tool, but they are not always enough on their own. Always combine it with other indicators, chart patterns, and fundamental analysis to make better trading decisions. Now that you understand RSI, go and explore how it works in your trading strategy. Practice on demo accounts and test different lengths to see what suits you best. You can check out our Forex trading community at mytradingland.com to interact with other Forex traders and also get access to Forex trading tools that can help your trading journey. If you find value in this video, like, share, and subscribe. Don't forget to leave a comment, and I will see you in the next video.